Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very nice weekend. And in today's markets, guys, well, we said the volatility would be high, and it's starting off the week with a banger indeed. The SPY and the QQQ starting the day off with huge gap down opens. At one point at the peak of the morning, the SPY was down almost 1.6%, and the Qs were down even further, almost top to bottom from the Friday close, down almost 2.25%, before we got a nice little rally into the close, which saw the SPY actually close green and the QQQs closing roughly flat. A few other of the major sectors started off with a bright red day, but were able to turn it around. Financials starting from red all the way to green, and healthcare as well, starting deep in the red and turning around into the green. So volatility is going to be front and center this week, of course. We only had two major news events that happened over the course of the weekend. Number one was Trump commenting on the scope of the tariffs, saying that you would necessarily start with all countries when journalists were trying to get us insight as to would it be only certain trading partners or broad-based. Trump said pretty much you would start with all tariffs in terms of reciprocal tariffs towards all countries. And then second, we had Goldman Sachs increasing their odds of a recession from 20 to 30%. Those two things, obviously, the market did not digest very well. And then towards the end of the day, we had what you like to call a quarterly rebalance by the indexes, which did help to bring the markets into green territory. But such catalysts like that are somewhat short-lived. We know it's going to be a very action-packed week, guys. We have a ton of macro catalysts on the horizon. And of course, the reciprocal tariff date, which will be Wednesday, April the 2nd. So should be a very interesting week in the markets, to say the least. Now, in today's video, we're going to do a few things together. Number one, recap the technical analysis from the day over the course of our major and minor sectors overall. Thereafter, recap some of our big tech names too, because once again, big tech was front and center in the firing line in today's price action. So we will determine the support, the resistance levels for big tech, and are they still at decent valuations to nibble for some long-term portfolios, or maybe even some short-term swing trades overall. So it should be a very fun video, guys. And amidst all of that, guys, we will also cover the monthly and quarterly candle closes, two things that, well, we only get once per month for the monthlies, of course, and then the 3-month time frame. Maybe that could give us a little bit of an insight as to whether the early stages of April could give us some further downside continuation, or just how the monthly timeframes are shaping up overall. So let's jump right into the action, shall we? The SPY up 0.67%, the Qs roughly flat on the day. When I pull up the heat map, you will see where most of the pain was caused. And of course, once again, it was in big tech. Unfortunately, a lot of the big tech names didn't have that good of a day, but Apple pulling ahead at one point today, over 2.25% before retracing into the end of the day. The rest, the bottom half of the market though, financials and healthcare were very good. And when I tell you guys, when you're looking for big pain red days of money leaving the market, you're looking for money to leave the Qs, the XLF, and the XLV. That is synonymous with pure fear and money leaving the market. However, when you see rotation, when the QQQ is weak, but then the other minor sectors are cooperating, you just have to understand that money is rotating, right? Away from the growth story, a bit of the AI scare story. Did these companies spend too much money on AI investments? Do they still have decent free cash flows? Is the growth story still there? And over towards more value and defensive sectors as a whole, which, to be honest with you, have been benefiting in the last week of trade. On the one-day relative performance, you can see that even better, technology and consumer cyclicals, the only two sectors getting left behind in the end of the day rally. Defensives, utilities, still maintaining strong. 1 week relative, guys, defensives and energy, which we've been talking about a lot, that energy trade and the consumer defensive trade, they are the only green sectors on the last 1 week basis. And overall, guys, the rest of the market led down by technology and communication services. So the damage is definitely done, but there are some rotation swing trade concepts that I did cover in yesterday's top 5 options video as well. So hopefully you guys are able to benefit from yesterday's video, because a lot of those plays either came into target or already, and you were indeed able to make a bit of money off of those. Now, before we get into the actual technicals, let's do a quick recap of the two news events for the day. Number one, we're going to go over this very briefly because we're going to get all the information on Wednesday when the reciprocal tariffs actually come into play. But the one news headline that kind of hurt us early in the morning is that Trump says reciprocal tariffs will start with all countries and rejects a narrower launch. It's exactly what he said. The reciprocal tariffs will target all countries. You'd start with all countries, Trump told reporters on Air Force One late Sunday. So let's see what happens. There are many countries, and there is not a cutoff, apparently. A piece of news number two was The recession odds are rising as Trump's trade war escalates by Goldman Sachs. The Wall Street banks warned clients Sunday night that it now sees a 35% chance of a recession in the next 12 months, up from 20% previously. We covered the 20% last month on the channel as well. That was an uptick from 15, now upticking to 35%. Goldman Sachs also increased the inflation estimate, slashed the 2025 GDP forecast to just 1%, and bumped up its year-end unemployment rate outlook by 0.3 percentage points to 4.5%, which, all things considered, is still towards historical lows. Goldman Sachs blamed the sharp recent deterioration in household and business confidence and statements from White House officials indicating greater willingness to tolerate near-term economic weakness in pursuit of these policies. We've heard that from several different members of the White House, whether it be from President Trump himself or the Secretary of the Treasury as well, saying that there is going to be a detox period for the economic movements in terms of what they're trying to do, right? A detox period away from government spending and government stimulus, more towards the private sector overall. Still unclear when the timing of the fruits of that labor will be seen in the markets, of course, but those are the current concerns front and center. It's right now in the markets a battle of expectations. Will the tariffs hurt, and how much and when? Will the other policies, such as slashing government spending and slashing government employment, will those pay fruit, or will they be somewhat misguided? Those are all things that the market is trying to price in right now amidst all of the uncertainty, which has led to a lot of volatility, of course, since the end of the month of February, all the way through pretty much today, and maybe continuing through the rest of the week as well, as we do have a slew of economic catalysts, guys. It's going to be a very big week. Tomorrow, ISM manufacturing report and the JOLTS jobs openings. Those can be big market movers. On Wednesday, we get the ADP private employment change. That's supposed to come in at 105 versus 77 of last month, which is good. But keep in mind, that is also the reciprocal tariff date where we get the news on all the tariffs. On the Thursday session, we get ISM services PMI, another big one. How's the services sector doing amidst all of this uncertainty and turmoil? And lastly, on Friday, we get the big one, guys, the non-farm payrolls, 128K, down from 151. 128K is a little bit soft, but it is still fairly decent, all things considered, in terms of historical standards. And the unemployment rate said to uptick to 4.2% from the 4.1%, which is a prior read. I'll remind you in terms of the context of this unemployment. We'll visit it a few times this week, but you should see, right? 4.1, 4.2, guys, is very, very, very low. When you go back historically, at least almost over the last 20 years worth of data, it's still a relatively low unemployment rate, all things considered, but any upticks will lead to just going with the narrative right now of uncertainty towards possible more unemployment in the future, right? It definitely doesn't help the markets, is what I'm trying to say, yeah? As well, fear and greed index right now still stands at an extreme fear read of 21. Market momentum is still at extreme fear reads as the market is well below a lot of its major moving averages. Stock price strength, net new 52-week highs and lows on the New York Stock Exchange still at one-year relative lows. There are not many companies hitting new all-time highs in the markets right now. A very small percentage of any company is, and stock price breadth also still remains in extreme fear. We go over these breadth indicators a lot, almost every day on the channel right now. And I keep telling you guys, right, when you get to historical low levels, percentage of stocks above their 20-day moving average, clipping down here into 30 to 20%, it's always been a very good buying opportunity, at least when you measure, I mean, guys, like you measure over the last 20 years, right? It's always been a good buying opportunity, but not deploying the entire cash pile, nibbling at some companies you've been patiently waiting for at targeted ranges. Into percentage of stocks above their 50-day moving average, same thing, 24%. Historically speaking, in the last roughly 20 years, yes, it can move lower, but has it been a good time to start buying when it gets down that low? Sure. And also percentage of stocks above their 200-day moving average, 35%. Can it go lower? Absolutely, but a decent buying opportunity, especially when you couple it with, you know, big oversold conditions like we saw early today and a high VIX as well. Speaking about those oversold conditions, let's jump right into the technical analysis portion of the video. And yesterday in the top 5, I was saying that futures were starting off the day deep hourly oversold, guys. When we started off, you know, last night into the futures, they were about a 13, and this morning culmination as well. This is bullish divergence. Higher highs on the RSI, lower lows on the price. You knew that eventually the markets would hit the capitulation fear level, and probably have a nice bounce intraday. It's tough to measure the size of the bounce, of course, but you are expecting one. That's on the NASDAQ 100. On the S&P 500, same concept, right? Big oversold conditions leading into 8 p.m. Eastern, lower lows through the morning, higher highs on the RSI. That is bullish divergence. You're expecting a bounce. It's just you don't know what the size of the bounce is going to be, but that is usually an indication that the short-term local bottom may be closer than you think, especially after 4 big days of categorical selling. You look at the SPY here, guys, on the hourly, at the open with the gap down, with daily oversold or hourly oversold conditions. You know, you could have gotten a hint from the futures, but when you see this on the SPY, you know, okay, probably the short-term bottom is in, and we will gauge a sense of the bull strength from the size of their bounce. And the size of the bounce was respectable, guys. We came back within the Friday candle, but let's not get it twisted, right? Who is still in control? Well, daily uptrend rolled over. Now the bears are possibly looking just for a lower high, and we'll see. With all of this economic news this week, and with tariffs on April 2nd, very tough to determine where these markets want to go, but we can establish who's in control right now and some key levels. The support range is still 550. Couldn't get a close below the 550 range. They're still protecting that. Will we just end up with a lower high into lower low? I guess we'll have to see at the end of the week, guys, because there's so many news catalysts this week. It's impossible to predict, right? You would just rather wait for your levels and then take the trades. Overall, though, you have to see it how it is. Who's in control of the trend right now? The weekly bears are still in control. We are almost looking for lower lows. And even on the monthly timeframes, guys, you look at these monthly timeframes, right, that just closed today, they don't inspire the most amount of confidence. Yes, the bulls are still looking for a monthly higher low, but we've taken back a lot of the move, closing in around the 12 EMA. When you look at the monthly MACD, it does point to possibly wanting to cross after 2+ years of bullish rally. That doesn't mean that we're just going to head straight down like this, but can we just maybe establish somewhat of a tightening range of uncertainty and let the market work itself out throughout the year? Yeah, and that would lead the MACD to turn down, right? Just as we'd be just moving sideways and not clipping into brand new all-time highs. The quarterly chart, though, you got to be careful on this one. You can see this is a 3-month candle, and it only closes once every 3 months. We just got that today. You now have a engulfing candle on the 3-month time frame, and normally these types of candles, especially when they're engulfing, can lead. I mean, here's 2018 tariff round number 1. Yeah, it did come down and clip into the 12 EMA, overbought here on the quarterlies. Can we maybe some point this year be coming into the 12? Yes, but it doesn't mean a straight shot down from here. April can be right like this, May can be like this, June can be like this, right? We won't really move on the price, but the 12 EMA will catch up eventually. It's just saying, are we going to blast off to all-time highs? Somewhat unlikely with all the uncertainty in the markets right now, yeah? But can we maybe just move slightly down or sideways? Possibly as well, but this quarterly candle close definitely doesn't inspire much confidence that we are on to a new all-time high push rally just yet, as we did come a fairly extended bit away from the 12 here. And usually when there's a lot of uncertainty, that's when the markets tend to go in some form of a short to medium term consolidation phase. So please keep all of that in mind. Moving on to the Qs, the same analysis, guys, right? Weekly, who's in control here? Still the bears. Weekly downtrend flush is now in order. Weekly downtrend is clear as day. No secret there. Above us is now resistance, 485 up to about 468, unfortunately. On the timeframes on the daily, though, it's not looking terrible. I mean, we did fill the gap right here, but then again, who's in control, right? The daily bulls had a nice shot, rolled over right now. Now we'd just be looking for maybe a lower high, depending on the size of the bounce. As I was saying here, yeah, measure the size of the bounce and see if we can actually reclaim the uptrend. That's step number 1. So same thing. Can we bounce high enough to reclaim the daily uptrend? And only then can we talk about recapturing the longer dated time frames such as the weekly. But as of right now, the bears remain in short-term control. If we continue flushing for the next few weeks, let's say, the next support area is 450 down to 430 on the Qs. The monthly candle close also does not inspire the greatest amount of confidence, closing below the 12 EMA for the first time since the entire bull market started in late half of 2023. So that is it. The bulls are now still in control of this monthly higher low, right? Looking for a higher low, anything above 426. But consolidation on the monthly is definitely underway with the MACD cross as well. The first time we've crossed on momentum in the last 2 years of trade. And the quarterly candles too, guys, engulfing candle in relation to the past quarter. Normally, when you get some engulfing candles, you can go back in history, right? Whenever we get some engulfing candles, you can come in and touch the 12 EMA, and the chart would not look crazy if we just establish a higher low and then possibly rally into the end of the year type of thing, right? I don't want to make any predictions. I'm just saying this candle doesn't look the best. Can we, at worst, go down in one clean shot for the next 3 months? Yeah, but can we also say stay sideways? This is the next quarter, then Q3, and then Q4, and we're still somewhat up here, and the 12 EMA has caught up? Yeah, sure, that's also a possibility, right? You kind of got to see it both ways. You don't have to essentially conclude that the markets are just going to go straight down in a straight line, but it's just, does this quarterly candle close inspire confidence? I don't know, but can we have a little bit of a rebound in April and then possibly roll over? Sure, but we will take this, as we always do, guys, one day at a time on these charts. Be patiently waiting our levels, and for any swing trades, especially long swing trades, we're going to be waiting for daily oversold conditions. And then when we bounce into resistance in the context of a weekly downtrend, those are the criteria for a short. Not this morning when everybody's panicking, right? That's not the entry point for a short when the VIX is high. The entry criteria is at resistance when the VIX is low. That's where you're really going to make some money if you're trying to go short or you're trying to grab some puts. That was here, right? That element on the VIX was up here on the Qs. That is when you get the best risk reward on those types of trades. Moving on to the XLF right now. Fantastic recovery by the XLF into the close. But then again, who is still in control, right? Big, nice sweeping uptrend right here. And unfortunately now, you're kind of losing it, right? You almost lost it. So they do still maintain the daily uptrend barely, but that's a big, big, big engulfing move. If the bears are able to set the lower highs and flush these lows, which is the lows of today, 48.62, right? Set some lower highs into lower lows. That will unfortunately be a weekly lower high. And then you know what the bears are looking for here. You're looking to roll over this index as well, excuse me. You're going to be looking 48.20 down about 46.75 for some possible support levels. Financials are holding up well, but I still don't have many huge opportunities on the banks. Yeah, Bank of America for me would have to come down 39 to 36 just off the monthly levels, guys. Yeah, I want the big juicy retest if I'm going to play financials in this market environment. JP Morgan was there not too long ago. The next time I'll be trying to taking the same trade will once again be down there 230, 220, not just buying here and crossing my fingers that we establish massive daily uptrends in the face of monthly consolidation possibly on financials. But so far on the monthly candle, holding the range of support, a big one. And on the quarterly candle, you can see how far extended financials are from their 12 EMA. This does not last forever, right? Every single time we pull too far away from it, there's always some form of catalyst that tends to happen. This was 2018 to where we go back and touch the 12. This is very extended. But once again, does it mean we have to come down in a straight line? No, you can just say somewhat sideways and balanced and give some time for the 12 EMA to catch up. So be very, very aware of the scenario right now in terms of the medium and long-term timeframes, right? Essentially what I'm saying is that the probability of just blasting to new all-time highs across these sectors that have ran too much, right? The Qs, the XLF, and even the SPY to a certain point is somewhat unwarranted given all the uncertainty catalysts that cannot be lifted in 2 weeks worth of time. You remember me showing you all these market catalysts that are plaguing our markets right now? They cannot be solved in the snap of a finger, right? It will not be solved. So that's why these markets may be very volatile for at least the near and medium term futures. Moving on to XLV healthcare right now. Healthcare, right? 1.03% to the upside, but getting rejected at resistance. It's a battle here. The bulls and the bears are really having it out. Above us is resistance, where we got rejected from 146.50 up to about 148.75. And now the bears, what are they looking for here, guys? They're looking for the engulfing move, lower high into lower low. We'll see if we get it, or if the bulls can save the daily uptrends and crack the highs of last week, 147.50 to the upside. They are trying to desperately save this weekly trend from rolling over. Flush these low though, 143.75, and you are on to a new weekly downtrend into possible further monthly consolidation. Here's the monthly candle close. It's like right on the line, guys, right on the line. So you can look at this either way, right? It's either a big head and shoulders, or the bulls are looking to set monthly higher lows and go for the expansion. I'll give the benefit of the doubt to the bulls just because if growth continues to be a pain point, there is a lot of rotation that goes into healthcare, not only healthcare, but healthcare, consumer defensives, utilities, and oil, energy trades as well. When economic times get a bit rough, right? This is where the money rotates into. So the technicals are telling you that, yeah, it's a head and shoulders, but you also know it's a defensive sector in, in times of possible economic drawdown. So it's like two counterbalancing things right now. I would rather wait for the break either way, guys. Either break down here, it opens up the possibility for a short on a retest of that range, or crack above, give me a retest, and then it opens up the door for a long. Here is kind of you're just guessing, right? Moving on to SMH. SMH had a brutal day to start off. It was down like 2.5%, recovering decently intraday, but still only a gap fill from Friday, yeah? Who's in control of this chart? Well, the daily uptrend was to the bulls. Now they've rolled over. It's not a daily downtrend yet. That would be another lower high into lower low. But one thing's for sure, guys. I mean, you crack below. Unfortunately, I have to turn this box red. It was support for so long. For so long, it was support, right? For like 6 months, it was support. And now I do have to turn it red. Unfortunately, guys, weekly downtrend is in order. We crack below it to the downside. And now you may just be looking for a lower high on both the daily, lower high, and maybe rollover. We'll see. Maybe they can give us a tremendous bounce and reset. We'll take it from there, right? But right now, you have to understand the probabilities do favor any attempt to be for a lower high into resistance and maybe head lower. If we cannot even come back up there and we just flush, I'll remind you where we're going, down to this 200 psychological line for semiconductors. Moving down to IWM Russell. The Russell also very weak. I mean, they did fill the gap, but then again, still closing, lower than we did on Friday. Same concept, daily uptrend, right? Into the flush right there. So now you'll be looking for size of the bounce. If the bounce is very weak, you know what's going to happen. The bears are going to roll over. Why? Because we have a weekly downtrend bias to work off of, yeah? Into resistance rejection, and now into the lower lows. Support stays put, 200 down to about 192. Growth, especially the Russell, is still not a sector that I'm very keen on playing, especially not since they lost, unfortunately, the monthly uptrends, right? You've now flushed all the attempts for the monthly uptrends. The higher lows are right there. You've now lost them, so now it opens up the door. Best case scenario for a tightening range for a while until these issues are kind of solved and more clarity is brought into the markets. Worst case scenario, you're looking for the lower high into lower low and revisit the lows of 2023 or 2022. We'll take it, guys, one day at a time, right? I can't project out too far. I'm just giving you what we can possibly expect. And even on the quarterly time frame, yeah? Quarterly time frame, looking for a higher low, maybe down to the 26. You guys see, whenever the Russell gets a little bit of pain in terms of economic cycles or whatnot, all the way since 2011, yeah? It can tap into the 26, which at the lowest is like 185 roughly, yeah? Moving on to the Dow Jones right now. The Dow Jones also having a good day of recovery, but who is in control? The higher lows were set. We cracked the higher lows, and now, unfortunately, the bears have pretty much abolished this daily uptrend, right? Now, closing lower engulfing move, bounce up into resistance. Resistance stays put. 42.5 down to about 41.9. So we'll see. Can the bulls put in more of a bounce and recapture the daily uptrend again? Or will this daily downtrend just be, or rather daily downswing, be too hot? And then we have to roll over. And then even on the weekly, guys, I mean, the weekly bears, right? They are in control of this chart, technically speaking. If you take that as a wide move, technically speaking, it is this move because you got a little bit of a lower high, yeah. It is a weekly lower high right there as well at about 42.6. And now, could we be looking for further downside? Possibly, but we'll take it one day at a time. As I said, there's just too many catalysts on the horizon. If all of them are good, all these indexes will bounce, and then we can evaluate whether daily uptrends can be set. But if they're all negative, the bears will just resume their short-term control and head for possible lower lows. And as you can see, there was some very good rotation on some of the sectors we were calling out. If you pick the XLPs, where we were calling them out 2 weeks ago, you're probably doing a bit good right now. Utilities as well, decent entries, guys, at these lows. Still nowadays, decent entries, all things considered, if you're playing this for a swing trade or maybe some short puts under the market. And even energy, right? Energy, we were taking a look at this one over the past few weeks. Energy, seasonality, right? Oil, this is usually the best seasonal pattern for oil. 28 years of data. You can even go look at 40 years worth of data. You'll see it's always the same. Travel picks up in the early spring and summer. The kids are home from school. There's more car travel. There's more bus travel. There's a lot more plane travel as well in the Northern Hemisphere, especially countries that go through the winter cycle. And namely, there's a lot more agriculture for the Northern Hemisphere that supplies a lot of the agriculture in the Western world, right? So that being said, that's why oil is seasonally good. This is where oil companies tend to make their most amount of profits, regardless of the price of the barrel of oil at that time. So just seasonally speaking, that's why it's interesting to play oil in these current conditions. I even covered that in yesterday's plays too. Taking a look at the VIX. Well, the VIX, right, coming down today from its peaks. But when the VIX is high, We want to be looking to buy, right? That being said, we might just be looking to retest. There's so many volatility catalysts, guys. Take your pick, yeah? There's just so many, plus April 2nd, that we don't know whether this is the short-term peak of the VIX or whether it can go a bit further. One thing we do know is if the market reacts negatively to any one of those news events, we're probably going to be heading right back up to where we were, the 30 level on the VIX, which can bring us some even better buying opportunities. But I love to be a buyer, even if only nibbling, or for some swing trades, right? Some swing trades. I mean, we'll go through them, but the top 5 options plays that I gave you guys last night, with the peak in the VIX this morning and the big gap down, you were able to shop for some short puts way under the market and possibly even close them today for 50, 60, 70% profit. So hopefully you guys are able to benefit from that list I put together for you last night. Everything really played out as planned, but you kind of just needed to stare the fear in the face, look at the technicals, look at the strike prices, and just fire off the trades and not get too emotional, right? That's what trading's all about. Moving on to the yields right now. The yields also down about 0.94% today. We'll see a bit of a recessionary trade coming, or recessionary hedge coming into the markets today, which we've been talking about. The best chart for yields is arguably the weekly time frame. We've been looking for this head and shoulders rollover, looking to set the weekly lower highs into lower lows, rollover on the 10. Similarly, on the 20, same concept, lower highs, looking for the rollover, and that should bring more interest into your long-term bonds such as TLT. It's just the inverse, right? The weeklies looking for a higher low for possible trend expansion into TLT into the $95, $94 range. I still like this trade, guys, but it takes a long time to play out, yeah? We can take a very brief glance at gold, which continues rocketing to the upside. Maybe not the best catalyst, guys, or rather, maybe not the best environment to FOMO into gold right now for a short-term trade. You missed it. But anybody looking to run a barbell strategy in their long-term portfolio, holding some equities, some bonds, some gold. If you don't have gold, I mean, you can always average into the position over time if you expect to hold it for the next 5, 10, 15 years, yeah? But for those of you swing trading, you got to be patient and watch your levels. Play with the hourly ranges, that's for sure. But on the daily, how much more juice can you squeeze out of this trade before it gives a logical retracement first? So I would be keen on waiting for a logical retracement back to the 12. And as you can see, right, if you go back here and you weren't patient enough, right, you bought it up here, sure, depending where you bought it, you made a little bit of profit, but you see, eventually it did come back to the 12 EMA. So we're going to be waiting for that style of trade again. And gold always comes back to the 12 EMA for the most part. So we want to wait for a retest trade for a better risk management reward, risk to reward entry, right? You get in here for a swing trade, like where's your stop loss? Maybe if you're trading on the hourlies, but if you're going for these expansionary legs on the daily time frame, at least if I'm trying to take the trade here, right? At least have a local stop loss. But if I'm trying to take the trade up here, where's my stop loss? Still down here? Where's my profit target? Maybe you're looking for crazy levels like 35. Okay, you can argue that, but still, you guys get what I mean, right? Moving on to Bitcoin right now, up 0.23%, but Bitcoin's been fairly weak, right? Rejecting out of resistance, 86.7, up to about 92,300 overall. We know what happened here is the bears just engulfed the most recent daily higher lows. And now at this point, you're looking for, unfortunately, guys, lower high. And above us, there's a lot of rejection zones. All the moving averages right there at about 85, 86, and this big box as well. You can clearly see what the bears are going for here. This, unfortunately, as a long-term shareholder of Bitcoin, long-term versus swing trading is completely different, guys, yeah? I can be long on Bitcoin for years and years and years, but I can still recognize that, a backtest of resistance when weekly bulls are in full control is probably a condition for a short, right? That's still the condition right now. Monthly, just looking for monthly higher lows, and that's why I would not be surprised if we do get more monthly consolidation with this monthly candle close. You probably head right back down here, 73.5, down to about 68,000, the prior resistance range from all the way back there. Now let's move into our big tech name, shall we? So looking into Apple, guys, and we are going to focus a lot on the monthly and 3-month time frames, just to show you guys the extent where we could be expecting, right, to save some cash. If you really want to look for absolute lows, you can DCA into Apple. Let's say you have like $10,000 for Apple or $10,000 for Amazon or whatever, however much cash you have, and you want to nibble, and then save a little bit amount of cash, like a bulk for one target level. I'll show you where those levels could possibly be, yeah? So looking into Apple right now, Apple with a great recovery, but still not able to close above the 200-day EMA. Did Apple change any trends today? No, they did not, right? Still a lower high. or rather a higher high, looking for a higher low, but no close above. So Apple can still be on the table to possibly roll this move over. We will see. Maybe they can set the higher lows into higher highs, but it's very tough to call, guys. I could go through the hourly timeframes and say, yeah, watch for the hourlies, but I mean, does any of that matter this week with so many catalysts and the April 2nd tariffs? Probably not, right? It'll be a lot clearer at the end of this week with the weekly timeframes. That being said, we are still in support, 221 down to about 211 on Apple. Not looking the worst, but who's in control of this weekly chart? Well, obviously, it's the bears. Yeah, they're just looking for lower highs and possibly to revisit the lows. The size of the bounce right now on Apple is still fairly weak at about 38.2%. So if there is any weakness and we somehow roll over today, well, you can expect some revisits of those lows. The monthly timeframes also, Apple not looking terrible, but to be considered, guys, we did lose the monthly higher lows, essentially at that area 220. Now we've flushed below them. So now it does look, right? It does really look like those monthly candles are being challenged right now on Apple. Apple also doesn't have the best revenue growth for the year. A lot of their segments are kind of lagging behind. The AI rollout has been questionable. End of the day, it is Apple. They have a tremendous amount of free cash flow. They buy back a tremendous amount of shares, and it is known as one of the more defensive tech names in all the market. It is loved at the end of the day by Wall Street. In the 3-month time frame, though, if you guys want the absolute cutthroat levels that I'm looking for in the 3-month time frame, the position, touch of the 12 EMA. Go back in history and see when times get rough for the stock market, 2018, COVID, 2022, when Apple was having its own issues, which we covered a lot on the channel, into early 2024, they always come back and touch the 12 EMA on the quarterly time frame. This is an engulfing candle, yeah? Looking for a higher low. The level for me on Apple, I've said this a few times on the channel, maybe now you guys know why. 200 down to 185, I would consider for some larger term swing trades on Apple. Moving in now to AMD. So AMD also down about 0.47% today, recovering a lot of the gap down from the Friday open, but we unfortunately have now lost the daily uptrend, right? Loss of the daily uptrend, big engulfing move. And now at this point, the bulls need to do a lot of work to get it back. Yeah, we're defending support, which is 97, this green box, 97 up to about 115. However, that being said, guys, if the bulls can get a rally, once again, we have to do everything from scratch. Size of the bounce is key. Can we recapture the daily uptrend? And can we keep this weekly move alive? It was a nice weekly move, looking for weekly higher lows. Can we get a weekly uptrend? If we don't, we never said it, right? That was just a nice bounce. Now you're going to reset the weekly uptrend. Even though the MACD is looking good, if the markets do not cooperate this week, it would not be crazy to see AMD break the lows, go lower, and at the end of the day, they could end up. I'm not saying they could. I'm not saying they will. But the next big area for AMD, if we lose this over the next few weeks, should be down here, 83 to 70. I love AMD, guys. But, you know, any shares that we commit to now in this market environment, we know semis are out of favor completely. And we know AMD is at a tremendously cheap valuation right now. The thesis for AMD is coming alive second half of this year, yeah? You can see the EPS ramp that they're going to be doing the next 2-3 years. And conversely, or rather similarly, the revenue ramp in the next 3 years. If we're buying AMD here, guys, you have to have like a 2-year time horizon at least. I'm not saying it'll take 2 years for the stock to actually rally, but for the thesis to play out and for it to actually hit the prices that everybody think it can hit, you have to give it some time to play into that fundamental thesis, yeah? Monthly timeframes, no change. Still a monthly sweeping downtrend on the charts right now. Lower end of support is right there. And the 3-month time frame, well, I mean, we are technically speaking looking for a quarterly higher low. And AMD, when times have been rough, they do tend to bottom out, mostly in or around that 26 quarterly EMA. So we'll see what happens on AMD. Moving into Amazon at this current stage, Amazon down about 1.28%, almost filling the gap, right? But Amazon was down almost, tremendously at one point today. They were down like over 4.5% this morning. Tremendous opportunity, guys. Amazon, when it hit this morning, look at how oversold Amazon was. 15 on the hourly RSI, plus high VIX. A few of our members in the chat, in the Discord, were able to get strikes all the way down here on short puts. You remember me telling you yesterday the expected move is 186? Go shopping for as low as possible. This was as low as possible, 175 for 0.5% per week. By the end of the day, those trades are deeply in profit. You can even close them, right? So you had to be fast, you had to be nimble, you had to stare fear in the face and rely on the expected moves, the support areas, and the fact that you were just so hourly oversold. It was like trifecta of things that I look for when looking to sell puts in the market. Quick little in and out snipes on oversold conditions. Love to see it. That being said, daily, is bullish divergence right now as well. So you would expect the markets maybe to have a little bit of curl up effect, but there's so much data this week, guys, that maybe it's just not going to matter. Rollover, unfortunately, we had a daily uptrend, rolling it over right now. So the rollover means that unfortunately weekly consolidation is not done, and in effect setting a weekly downtrend with the lower lows right there. Yeah. So weekly downtrend is in effect for Amazon right now. We will see. The bulls need to start everything from scratch. Give me a nice size bounce, then reset the daily. Then we can talk about maybe recapturing the weekly, but we'll see. The support stays put 191 down to 180. We're in that zone now. The deeper zone is 175 down to about 150 for Amazon. It's so big because it's the entire 2020 and 2021 range highs. Monthly time frame, excuse me. Amazon has not lost that. You can see clear monthly uptrend, looking for a higher low. So tons of space, anything above 153. Just looking for a monthly higher low for possible further trend continuation. And on the monthly, guys, when things get bad on Amazon, other than the pure bear market, quote unquote asset recession, because Amazon had negative EPS. You don't believe me? This is the only year where they put in negative EPS. Yeah, they spent too much money expanding their, which was good for them, expanding their e-commerce business and also their AWS business too. Spent a ton of money, negative EPS. That's why they dropped that much. But when times get rough for Amazon, right, like 2018 or even COVID, you can see they clip in on the monthly to the 26 EMA all the way back 2014, right? I can even zoom back here if you guys want to see, yeah? All the way to the 26. So Amazon for me, that's why I love 175. On the quarterly time frame, same area. We're looking for a quarterly, right? Monthly or 3-month rather, higher low. And that area is additionally 175 to the 12 EMA. Look, it touches the 12 EMA all the time, except for 2022, of course, and then into huge 2021 highs. I love this area on Amazon, guys, which is why I'm so keen on writing puts down there and accumulating shares all throughout that location. But if you're too patient, maybe it doesn't come, which is why I have been buying some shares here, a little bit there, and I'll go a bit heavier down there, yeah? Moving on to Google, that's how you kind of do these things. You're not trying to pick the bottoms, right, with the full bag. No. DCA into it slowly and then keep a portion of buying power for the absolute juiciest level that you're looking for. On to Google right now. So Google also suffering today. This one was actually positive, but, was negative throughout most of the day. That being said, you also had you can argue if it was a daily uptrend or not. In the context of the weekly, though, still at this point, everything is lost. So at this point now, guys, reacting from the lower end of support, which is 153 down to 141. What is that zone? I'm glad you asked. It's the 2021 highs. 2021 highs on Google, guys. Google now down roughly 26% from the all-time highs. Have they been improving fundamentals since 2021? Well, let's have a look. 2021 EPS, 561. This year, $9 almost. Revenue, 2021, 257. This year, 389, 400, let's call it, right? Significantly improving both, but you're getting it for the exact same share price. That's what I like to call a deal. Couple that with the fact that Google is very fundamentally cheap right now, 17.5 on a forward price to earnings and a 1.16 peg. Extremely dirt cheap for Google, guys. I really do like this area, 155 to 140, but go slow. We know who's in control right here. It is still the weekly bears with a new leg of weekly downtrend on the monthly time frame as well. Well, now Google has been all but de-risked at this current stage on the monthly time frames, yeah? The monthly in jeopardy of losing the monthly uptrend, 148, close below 148, you lose the monthly uptrend. It's not a downtrend, that would be this, like this, yeah? This was a monthly downtrend. Not a downtrend yet. For that, you need lower high into lower low, but still, big correction on Google and almost again, daily oversold. On the 3-month time frame, you'll see that the picture is a little bit more clean. The higher lows are all the way down there. All the way down there, guys, are the higher lows. Looking for new higher lows. And funny enough, when times get rough for Google, you can either get to the 12 or slightly below. The GOOGL ticker has a bit more price data history. You can see when times get rough, Google usually finds its temporary bottom around or slightly below, like 2022, the 12 EMA on the quarterly chart, which is why I love, this is confluence, guys. Highs, EMAs that have rarely been tested, big monthly drawdowns to levels between the 12 and 26 EMAs on the monthly that rarely get tested. And when they do, it's a good buying opportunity, right? Couple that with also almost daily oversold conditions. And you know that we probably should be buying Google down here with a cheap fundamental valuation if we like it. Just everything is coming in confluence. Moving into Meta right now. Meta also down about 0.07% on the day. They were down a lot more at one point, but still recovered a bit intraday. That being said, who's in control right here? Well, the daily bears, unfortunately. This was a big, series of daily downtrends right there. Then you got a nice engulfing move. You couldn't set the daily uptrend. You just rolled it over. So now we're going to be looking for a lower high. Where's the lower high going to be? Bounce high enough, we can talk about resetting the daily uptrend. Weak bounce, well, you're just going to roll over under the 200-day EMA right now, 576. And if I draw a little line right here, I know it's a one big range, but you can see, guys, this level is challenging. Yeah, that's the 587, 590. Challenging for the bulls. We'll see if they can do it. But as of right now, we are, once again, now in meta. First time in a while. Confirmed weekly downtrend, right? Lower highs and now the lows, right? So now everything is set in motion. We're still desperately protecting 550. Flush this to one more level. You come down to 520 all the way down. It's a big one, 450. Yeah, it's a very big range. You can argue, sure, there's a top part of the range, there's a bottom part of the range. But understand when you look at the monthly, this is where all the prior congestion was. Now, Meta still does have the monthly uptrends at this point. The lows are down here, 440, expansion, looking for a higher low. But look at the 3-month time frame, guys. This quarterly candle just closed. Does that candle look amazing for absolute all-time high creation in the next 1 to 3 months? I mean, maybe. Who knows? Maybe they can, right? But the shooting star candle like that, guys, or bearish, just a bearish doji candle, as we like to call it, kind of leads you to believe that if the rest of the market keeps coming down, Meta is going to be a prime candidate to come down into that range. And Meta, for the most part, has respected its 12 EMA, except for when we went through the absolute destruction of the stock in 2022, which I don't think is going to be the case this time around. But can we maybe just hover around here, for the next couple quarters as the 12 EMA catches up? Sure, the worst case is the absolute flush, right? But I'm not expecting that. Meta is very strong. They have a lot of free cash flow. They have much better fundamentals than they did, just 2 years ago at this point in time. So just all those things, keep those in mind, which means that Meta maybe is a company that you want to buy more slowly because it hasn't gone through the amount of correction, at least not on the monthly and 3-month charts, that some of the other names in this list have gone through. Does that make sense? But still, fantastic company, and I am nibbling on Meta down here. Moving on to Microsoft right now. Microsoft down about 0.9%, deep into support right now. 378 up to 365 is that zone. You can see that's the previous guys from right back there. Weekly downtrend is still maintained in motion right now. The lower highs are set into the resistance box, which I was calling you guys out on, right? Be careful into resistance. Who's in control here? It's the weekly bears. Can't get too greedy into those resistance zones, right? Daily uptrend is now lost. We'll see if they can get a bounce from here. Perfect. Nice enough bounce. We can reevaluate for a daily uptrend and maybe a retest of the range and try to get the weekly uptrends back. If not, you might just be rolling over a little bit more. And unfortunately for Microsoft, I mean, the next big area for Microsoft, guys, is these guys right down there. I'm sorry the box is red. I'll put it green when I can. Right down there, guys. You're talking like 345 down to 325. That's if we lose this area in a big fashion. It's not lost yet. We'll tackle that when it comes to it. But Microsoft, very decent valuation for Microsoft right now. Super strong company overall, all things considered. But the price action on the monthly timeframes, guys, this one has corrected to some historical levels. Usually Microsoft does not clip into the 12 EMA, or the 26 EMA rather, this orange line right here. And when it does, it's synonymous with being very close, possibly, to the final stages of its correction. Yeah, go back in time. How many times has Microsoft hit the monthly 26 EMA in any market? Not that often. Didn't think so, right? So moving on further, the 3-month time frame as well. 3-month has also largely at this stage somewhat been de-risked. I'll wait for my moving average to load. I don't know why they're not loaded. There they are. So how often does Microsoft, right, going into quarterly consolidation with lows all the way down there? Quarterly consolidation, yeah, it's been like 9 months into the 12 EMA. How often does Microsoft come into the 12 EMA? You tell me, right? You tell me. This whole lost decade period, sure, but since 2013, even since 2011, how often does it pull into there? Not very often at all. So is it a good proposition to start to buy Microsoft here and now down and further below into 2021 highs? Quite possibly, right? That's why I'm a big fan of nibbling. And down here is where you actually, you'll see some pretty big orders from me. Moving on to Netflix. Netflix also down about 0.14% today. Not the worst day for Netflix, but them as well, sacrificing the daily uptrend, right? So now we got a break of the lows, unfortunately. Lows were at 923. We now flush those, so now the bulls have to start everything from scratch. You want to regain the daily uptrend? You got to do something like this. We'll watch for the size of the bounce. reacting nicely from support 935 to 900. On the weekly timeframes, though, not looking good. You remember, right? I told you this much of an engulfing move. When you get a 70+% engulfing move, the best the bulls can hope for is a two-step recovery process, because the V shape is very unlikely, especially when the SPY and the QQQs are in weekly downtrends, right? I mean, come on, Netflix can't do it on its own. And if you just roll this over and flush the lows here, guys, not going to be looking good. That's the infamous, prophecy of the head and shoulders. And on the monthly timeframes, I mean, Netflix, guys, it has not come back and touched its 12 EMA in a long time, right? That would be the first big level if we flush down there, right? The first big level, 800 for Netflix. Just don't get scared, right? When I show you the quarterly chart, because it's monthly overbought right now. It has been for a while. I've been telling people, be patient. It's okay to nibble up here, but understand the bigger nibbling should come decently down there in the event of a market correction, right? Look at the 3-month time frame. Is it a good proposition, guys, to be buying 3-month time frames this far away from a 12 EMA when the company historically can come back and touch, can historically come back and touch it in any markets? Not talking about 2022, right? But in prior markets. Let's just use this one here, 2018 to 2019. It gets way far away. You buy the stock all the way up here thinking it'll never come back. It comes back several times and touches. What about back here? You buy it too far from the EMAs in 2015? Does it come back and touch it? Yeah. What about back here in 2014? You buy it too far from the EMA. Does it come back and touch it? Sure. Right? So that's what we're looking for here, guys. We're not saying it is going to do it. We're saying there's a high likelihood that we can consolidate, if not straight down, right? Maybe sideways for a few quarters as the 12 EMA catches up. So be very patient on your Netflix buys. All I'm trying to say here, guys, is all-time high blast off record expansion possible with the indexes in weekly and monthly consolidation? Probably not, right? So be patient. Moving on to NVIDIA. NVIDIA right now down 1.18%. And I did fill the gap from the Friday session, pulling back a little bit intraday. That being said, who's in control right here? Failed daily uptrend breakout, rejection at the 200 EMA. Now, this is officially a daily downtrend, right? Rejection, daily downtrend. Any bounce going to be looking for a lower high. We will see. How high can the bounce get to reset the trends? If they can't do it, if the bounce is too weak and we roll over, you know that the retest of the lows or lower is likely. Support stays put 112 down to about 101 on NVIDIA. Who's in control of the weekly timeframes here, guys? The weekly bears are still in control of this time frame. We will see if they can hold and then create a nice daily uptrend as they tried to do here. And then maybe they can create an engulfing move on the weekly and reset. We will see. Those are all things we're paying attention to. But if we flush this zone, we're coming down into the bigger zone. 96 down to 76. Pay special attention to that. NVIDIA is very cheap right now on a valuation basis alone. 25 forward price to earnings, 1.10 in terms of a peg. But just because it's cheap doesn't mean it can't get cheaper. Just like it was expensive this entire rally, does it mean it can't get more expensive? No, just like Palantir, right? So, I mean, if you're buying here saying that NVIDIA is, it's expensive, but it can keep going up. Well, I mean, if it's cheap right now, well, yeah, it can get cheaper, right? So keep that in mind. We're just relative basis here, yeah? So NVIDIA, take a look at this 3-month time frame right now, which just closed today. 3-month engulfing candle, the first one of its kind since the last correction in the markets. Can we maybe, just maybe, wait for the EMAs to either catch up by moving sideways for a quarter or two? Or maybe just come down straight into it if the markets are really bad? Yeah, but one thing you should be determining now is the best location to buy NVIDIA is probably $95 to about $80, right? That's where the market seems to want to push the price. We'll see if we get that price. I don't know if we're going to get it. All I know is if we do get it, I'll probably be buying a bit more heavy. Moving on to Tesla. So that's what I want to bring your guys' attention to, guys. We don't know. Nobody knows if the prices are going to come there. All we can do is nibble now because the market conditions do warrant a nibble. Valuations are good. We're into correction territory. Fear is very high. Uncertainty is high. The VIX is high as well. But if we come into my best levels, that's when I buy heavy, right? So keep that in mind. That's all I'm trying to say here. We don't know if it's going to go down there, so we want to be buying a little bit. Then if it comes down to our actual juicy price point, then's where we buy. But what you don't want to do, if you're a fan of all these companies, like what you don't want to do is just categorically say, I think Google's going to 130, so I won't spend a single dollar on Google until it goes to 130. Well, what if it never goes to 130 and you're sitting there waiting for the next 6 months, recession or not, and it just never goes to 130, right? you'd rather buy a little bit. Let's say you have 5K for Google. Maybe throughout this correction, you deploy half of it and then save the other half for if it ever gets to 130 or cheaper. But you can't sit on the full stack, guys, and predict, okay, yeah, I'll only buy when it hits 130, as if you know for sure it's going to get there. Nobody knows, guys. Nobody knows. I'm trying to give you guys the best and methodical approach. And it's not mine. Guys, many legendary investors have come far before me, right? Warren Buffett, Peter Lynch, they all say to do that. They've been doing perfectly fine in their careers as well. So on this channel, what we choose to do is I'll identify levels for you for swing trades, whether long or short, and give you my swing trades as well for selling put options and stuff like that. But the long-term portfolio, if we're looking for share accumulation, there's a specific way to do it. And we should be doing it the way I described, which is kind of by the book and more prudent than not, right? So that being said, moving on further, we're now down to Tesla. Tesla as well. Tesla was down 1.67% today. They recovered a bit of the drawdown. But that being said, guys, right, we're still in somewhat of a daily uptrend right now, looking for a higher low. Anything above 222, looking for a higher low. But, you know, there's always that overhead resistance, 303 down to 258. And I'd be kind of wary because Tesla has their deliveries numbers come out tomorrow, right? Always the first of the new quarter. So keep that in mind. We'll see what those deliveries numbers have to say. I won't be playing Tesla into those delivery numbers. Lower high on the weekly, arguably, I mean, you can't call it until they lose the daily uptrend for sure. But it does kind of look like a lower high into resistance right now. So we'll keep our eyes peeled. But if that's the case and deliveries are bad, you can expect Tesla to revisit the lower support, 220 down to roughly 200. The monthly candle close, well, it wasn't so bad, right? Technically speaking, we're still in a monthly uptrend. We got the higher lows right now. It's just, do we know if it doesn't continue further? No, right? It's just back into this massive chop zone. On the 3-month time frame, though, guys, this is something you don't really like to see, right? The big railroad track candles like that go up and give it all back. It doesn't give you the best impression that a crazy upside continuation rally is underway. If anything, it might just tell you we may just be range bound, a very wide range for maybe longer than people expect. Moving now on to Palantir. No, wait till I show you those 3-month candles on Palantir, yeah? So daily uptrend was nice, but then we lost it, of course, flushing the lows. So now the bulls have to do all the work again and get the daily uptrend back. 84 down about 77 is the mark on Palantir on the weekly time frames overall. Well, you know, I was saying similar to Netflix, right? It's very hard, guys, very hard. When you get a massive engulfing move like this, right? Or not engulfing, but, you know, 78, 80% retracement. It's very tough for the bulls to just moonshot V-shape this when the SPY and QQQs are in weekly consolidation, right? It's very hard, very unlikely as well. Now, that being said, if the lower high is set, which it is because they lost the daily uptrend, and we flush lower, that would be the first weekly downtrend on Palantir since all the way back here in early 2024, and you'd be targeting lower levels, 72 down to 65. The bulls are holding up great, but keep in mind, guys, the valuation of Palantir right now is still very, very, very expensive. Objectively speaking, this is not subjective. This is just objective valuation. It is expensive. Moving on to the monthly time frame, guys. Well, the monthly close was not so bad, but keep in mind we are still monthly overbought. We're very far extended away from the 12. Does that mean we just straight shot down to the 12? No, but what it does mean is maybe if the markets are not cooperating and we do not get that expansion of these growth names as we saw in November, December, right? Maybe we just spend a couple months consolidating on Palantir until that 12 catches up and until the company puts out more earnings that make it justify this valuation and show those revenues and EPS gains to us. 3-month time frame, well, arguably there's not enough data on Palantir to really make much sense of this, but I think you can tell, right? We're very far extended from the first moving average that's been created, which is the 12. So I'll discount this one because there's not enough data, but the monthly as well kind of paints the same picture, right? We might just be due for at best sideways action, at worst, of course, the downwards flush, but I can't predict this either way. All I'm saying is we are extended. Consolidation would not be surprising. And now SOFI, moving on to SOFI, down 1.86% today, almost largely filling the gap as well. But then again, we did lose the daily uptrend, yeah? Flush of the lows right here, 1182. We've lost the daily uptrend. So at this point in time, the bulls need to start everything from scratch. Give me a nice bounce. Then we can talk about daily uptrend recapture possibilities like back there. So far, not having it just yet. Just one day of green's not going to do it for us. The weekly is still in control by the bears right now. You can clearly see that. We are into support though. 1175 down to 958 is your big support level on SOFI. The valuation is quite attractive right now. It was at $13, so I assume at $11.50 it's even better. Of course it is, guys, right? That being said, we are still in monthly consolidation for SOFI overall. Not too bad. Looking for a monthly higher low. A lot of space on SOFI and into nice support. So I do like SOFI in this region. The stock has largely been de-risked from the highs earlier back in 2024. Before last, we got Uber. So Uber as well. Not looking too bad today, right? Recovering as well from the drawdown. But let's be honest, we're flirting with the loss of the daily uptrend. The higher lows are right there. We've almost now lost them back into support, though. 73.50 down to 68. This is another one where it came down really early. It was on my top 5 list. It came into the expected move in one day. You could have probably gotten, 67, 66 puts all day. And by the close, it would have probably been very, very, very profitable if you were a fan of Uber, of course. On the weekly is not as clear. Still trying to find some form of a tightening range on the weekly. I wouldn't say we lost the weekly uptrend, right? The loss is down here, 69.5. Lose that without any new highs. You lose the weekly, and then you're just going into more monthly chop on Uber. If you ask me my best possible price for Uber, 60s to mid 50s, I would buy this stock, even on the 3-month time frame, guys. We haven't really pulled away much, right? It's just sideways chop consolidation, but you guys can tell, right, where the best area is for this stock. 63 to 60. At 70, it's a good value, but at 60, it gets extremely juicy. And now lastly, TSM as well, up 0.45%, filling the gap from the morning. TSM was down almost 3% early in the day today. Actually, as a matter of fact, they were down, about 3.2%. So TSM also losing this very nice daily uptrend, rolling it over. The bears are in control. We will watch the size of the bounce as we are into support 172 up to 156, or down to 156 rather. Nice bounce. Sure, we can talk about the daily uptrend recapture, but just be cautious of resistance up there. The weekly, you got to give it to the bears. Yeah, clear form weekly downtrend right now for the bears into support. So we'll see. It all starts on the daily. Give me a daily uptrend. We can talk about a weekly uptrend recapture eventually. But as of right now, the bears do control those timeframes. On the monthly, we're looking for a monthly higher low for possible further trend continuation, right? We will see. The monthly higher lows are very low right now, 134. So the bulls do have a lot of space here, a lot of space. Arguably, the 26 EMA, the 150 would be a very attractive price point for TSM. On the 3-month time frame, you can see largely the same, right? We've come a long way from the 12 EMA. When things get bad for semis or TSM or both, where does TSM come back into? In the last 15 years, it comes back into the 12 EMA, right? Into the 12 EMA. This went below during 2022 bear market, but is the 12 EMA a good spot to go a little bit heavier, especially into 2021 highs? Sure. Is it a good spot to start buying up here? Yes, but if you want to know my big heavy buy location on TSM, it's down there. Am I saying it's going to go there? No, we can also catch up by moving sideways, which is why I want to be buying here. I like buying here, but if somehow we end up down there, that is when the heavy buys come into play. So that is everything I had for you guys today. Hopefully you enjoyed that monthly and 3-month time frame recap. Hopefully it makes more sense how I stagger my buys, nibble with good valuations, and then where my big heavy buys would be if I have to do them. So hopefully that makes sense. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these every Monday to Friday after the close. So hopefully I see you back soon. And lastly, if you have any questions, as always, guys, always feel free to leave them down below in the comment section. I'll be more than happy to answer you. And lastly, if you want to join our private trading group and get all of these trades that I was talking about last night live in real time with me trading on the live stream and pointing out all the trades in the event you wanted to try your hand at them and trade as well and invest with a community of almost 200 members total that use the same consistent strategies, same consistent long-term portfolio buildings, right? And just going off of sound investing principles, the Discord might be for you. Here's all the trades since the inception of the Discord. The green check marks are wins. The red little circles are losses overall. So most of them are wheel trades, but we do a ton more things, guys. We do swing trades with options, call debit spreads, put credit spreads, market permitting, leap call contracts, market permitting as well, swing trades with shares, of course, which I think I said already, and long-term portfolio investing as well. We do private morning live streams Monday to Friday for 2 hours. If you can't be there, don't worry, they're always recorded. You can watch them after, or you can ask me your questions on your stocks, options, long-term portfolios in our respective chat rooms, and I'll be very happy to answer any and all of your questions. If any of that sounds good to you, and we have private videos too, advanced level strategies, And I also share all my watch list, all my technical analysis, and all my annotations for fundamentals too. If any of that sounds good to you, well, explore the link down below in the description of the video to join our trading group. And that is pretty much it for me, guys. Have a good one tomorrow. I'll see you tomorrow after the close. Take care and peace.